extends a 90-day pause on 26% tariff is a positive move, but the threat of a global tariff war continues to linger. How will Indian markets and the economy brave this storm? And is India placed as compared to the other nations in a better way? Top market veterans chime in.
One has to really be very careful and cautious about export-oriented companies or export-oriented sectors. So that's one place to kind of really maybe avoid in this environment. But I still think the demand for pharma is going to be inelastic. I mean, no matter what tariffs are imposed, I don't see why suddenly there's going to be an alternative source for the United States to basically buy its pharmaceutical requirements, irrespective of the tariffs imposed. So I think we will live with some uncertainty. Maybe, in a few weeks, few months now, even these two pockets would probably create very attractive buying opportunities. Metals is something which one would avoid right now because, again, it's a factor of global demand, global prices.
Given this current tariff situation continues, India tariffs lowest being only stands out as an edge for India rather than a risk for India. So Indian producers will be far better placed in terms of exporting to US than anybody else. And if that's the case, then the worry should not be there. It should be seen more as a comfort. If the commodity prices remain soft, it helps India. I think India is not in a very mega inflationary environment. We are in a reasonably well-managed inflation environment over last many years, including during the Ukraine war time.
Barring China, the rest of the world will conclude reasonably constructive deals with America over the next 90 days. China will try to dump on everybody, including India. And the main way for us to deal with that is I think we need to consider depreciating our currency. Beijing is already depreciating the RMB aggressively. I think we'll see more of that from Beijing in the coming months. And I think we'll also have to consider flooding the system, our banking system with liquidity. The RBI has begun doing that. It's a step in the right directions. We need more interest rate cuts from the RBI. And I think we need the rupee to move towards 100, 105, given the rate at which Beijing will depreciate the RMB.
If you like this video, then like, share and subscribe to ET Now.